Good evening, everybody. Had a eventful day today. But this is the futures, so you can see they're trading up a little bit after hours. But here's one of the lessons that you want to definitely keep in the back of your mind. When they're trading below the T-line, the probabilities of a downtrend continuing is extremely strong. That's just one of the truisms that we have been able to establish with candlestick signals, which is the graphic depiction of human nature. And the T-line acting as kind of a natural support and resistance level of human nature. Oh, can everybody else see the screen? Yeah, Bill, make sure up at the very top you're on the screen sharing tab and not on the slides tab. Okay. So right now it's trading up a little bit after hours. Now the NASDAQ started off very bearish today. Let's make this big enough. I think it opened up down, 180 points or so. It was down over 200 points, but came back up where it only closed off 14. Now that's not changing the direction of the downtrend. That's just an up day and a downtrend. It's not any reversal signal. So it's going to be important to see how things open tomorrow. On the YM, that's after hours, and it's not a bullish Harami yet, or even. So notice where they opened here, and they closed almost at the same level. So that told you, even though the NASDAQ was down 14, us as candlestick investors have a little added advantage by knowing that even though the NASDAQ was down, it was up pretty strong from where they opened it. So that told us there was a lot of buying. All right, so I'm going to make you into this FT. Is that a bullish Harami? Or anybody else that can help FT? Yep. No. Where does a bullish Harami have to open? There you go. It has to open above the previous day's open and close below the previous day's close. So all that is right now is some buying going on. I wouldn't be surprised if they don't bounce it back up to the 50, which is a logical target. But until they get back up above the T-line, we've got to assume this downtrend is in progress. Let's see if I've got the... Oh, my fingers must be getting fatter. I'm getting fatter. So this is what happened in the... You can see what's happened in the transportation index for the last 3 months. Pretty much stayed above the T-line except for right there. And then it's trading back below the T-line again. So that's telling you there's RW, which one? On the YMs, what pattern is that called? And I'll let everybody help RW answer that. Right? This is not any pattern. This may be, yes, as Marshall said, this might be a bearish J-hook pattern. But this is not any. Oh, Ray, where did that come from? Dark cloud. Slow bulge. I've never heard of that, Bill. Anyways, right now, the futures are showing the Dow will be up 97, but this means nothing right now. I should probably just put this one on here, just to, that's not what we want. This is what we should be analyzing. The between August 1st and now, head and shoulders. Yep, could be a head and shoulders, making the 200 likely target. So anyways, this is the first thing I do every morning, is I look at the chart, say, all right, what should we be expecting today? Well, there's nothing yet that would tell us there's any anything changing this wave 1, wave 2, potentially wave 3 that could bring you down here. So that implies that that we're still in a downtrend, and again, with the added evidence that they couldn't get it back up above the T-line. Now, the only reason I look at the YM is because that is showing what the futures are telling us where the market might open. Now, remember, it means absolutely nothing tonight. This is just what's going on right now. Tomorrow's open, obviously, is 12 hours away, or close to there, 11 hours away. It could be opening down here tomorrow. So, nothing as far as the long tail. All that told us was they hit bottom and they came back up. That same scenario had been in over here and over here. So the tail doesn't mean anything. It's what the whole signal tells you. And right now it's just telling us that they were selling down. They were up off the low, but there's not anything showing us that the bulls are in control just yet. Now they're up a little bit more. So anyways, with that, so here's, if you only learn 2 lessons about candlestick analysis, it's that number 1, the T-line rule, that if you're below the T-line, you're heading in a downtrend. If you're above the T-line, you're in an uptrend. And the other rule basically is that the candlestick patterns have a lot more probabilities of moving in the right direction in spite of what the overall market is doing. Is it bad to buy in the overbought area? No. What's the candlestick price trader's logic, Cheryl? Very simple. If you see a candlestick buy signal in the oversold condition, that's probably telling you there's now an uptrend. If you see a candlestick sell signal in the overbought condition, you're probably in starting a downtrend. However, you're not quite in the oversold area, and you don't have any buying going on. So right now you just have to assume that the downtrend is in progress until you see something different. Okay, with CLSK, is there a way to know if the next candle could retrace before breakout? Not anything other than seeing what it's doing pre-market the next day. Now, right now, it's trading right about in here. But this is to illustrate that when this was setting up, and it was recommended based upon this kind of fry pan bottom setup, a little slow curve. Now, did we expect it to move up 28% today? Absolutely not. But here's the caveat, or here's the benefit of candlestick signals, is it's constantly putting you in situations where the probabilities of, number one, being in the right direction is extremely strong, and number two, puts you in situations where the probabilities of being in a big price move are greatly in your favor. So, and the third benefit is that usually a pattern is not going to be affected as severely, if at all, by the general market all of a sudden going drastically against you. So the reason I have been recommending Ian participating in these type of patterns is, look what this one, PEIX, has done over the last 3 days, or 4 days, 5 days, whatever. And in regards to look what the market has done over the last 3, 4, 5 days. So this is kind of to pound home the fact that if you're buying the patterns, you're going to be a lot less affected by the overall market conditions. So if you're in a situation where the market all of a sudden slams to the downside, I try to illustrate this in today's chat in the chat room today, is I had a lot of green on my screen, even though the market was off at one time over 1,000 points on the Dow. So this is, again, not anything to say, oh, we're great stock pickers or anything like that. It's just if you see a pattern, you're going to have a lot more benefits or a lot more advantages than just merely uptrending stocks. Same scenario. See the same thing happening here on Zoom. On your classic fry pan bottom J-hook pattern. So it allowed us to, and there is something very comforting, at least to me, because I still can remember the years that I went through. The market was down and all my positions would be down. Well, now, worst case scenario, if the market's down big and half my positions are up and half my positions are down, at least on a big down day, I've held my own and maintained the equity in the account. So we've still got a lot of good setups. INO looks like a little bobble breakout. I wouldn't be afraid to be buying that at above 1860 tomorrow. If you had huge call profits in SLK today, given the weak market condition, would you take profits, then buy the stock, or do a spread if it trades positive tomorrow? Boy, if I want to kind of maintain the equity in my account, and I had some big profits in this, which we've got so far, maybe tomorrow, if it opens a little bit sluggish, I close out half the position and then see what it does. And if it does start trading positive, then go ahead and do a spread. Now, the problem with trying to do a spread on this stock, can anybody see how much volume it did today and how much volume? Let me see if I can do this real quick. COSK. It did big volume today, 15 million shares. So here's what you have to be aware of. On a normal day, is that right? Yep. I took the wind out of that sail. Looks like it does a couple million shares a day. So probably you have, what you have to do on your spread on the next move is make sure there is enough open interest, enough volume on any given day. You don't want to get caught in a spread where you have good volume on one side, little on the other, because that means the odds or the probabilities of it on any given day that you can get close both sides at the same time get very small. Anyways, this was to kind of illustrate, number one, that you're in situations where the probabilities are greatly in your favor, that even if the market's going bad, there's still something going on that is building up in that pattern. So where were we? INO, I would be buying this one. And the next one that looks somewhat the same is SRNE. Also looks like it's doing kind of a bobble breakout support at the 50. So wouldn't be afraid to be buying this one on positive trading. What happened? So, got Codex, that's still a steady eddy. It traded positive today. And here's the one everybody was questioning. You still have a pattern. So this is kind of a good lead into this weekend, where this is kind of where you get some of the this weekend is going to be kind of a training where you get more of the subjective aspects of using the candlestick signals, basically allowing you to anticipate when to stay in a position and when to be nervous about being in a position. So not nervous at all about being in this position because you've got a left-right combo, a close above the T-line, and then notice where they supported today, right here on the T-line, and this is why I keep reiterating. If you see them supporting on the T-line and taking it back up, you're still in an uptrend. Now, this is still a good buy if it opens positive tomorrow, because what do you have going on then? Now you've got your doji sandwich set up. But you can sleep a lot easier at night knowing that as long as you're above the T-line, you're still in the right direction. Where's your stop? I'd probably put a stop at the T-line, that if it came back in this direction, what's it telling us immediately about our trajectory? Instead of it being like this, it may be more like this. If VBPR opens lower tomorrow after doji, should we close the position immediately or wait for it to, I'd wait for it to close below the T-line? Because you can see the pattern setting up. Your J-hook pattern, classic. So this is why I try to show this information, is because I used to get scared and I'd get whipsawed out of a position. But then when the T-line came along, I kept thinking, oh man, this can't be true. It's going to trade lower. But I've seen it so many times where it might even come down tomorrow, bounce off the T-line and head back up. Now, the reason that is so relevant is the fact that nobody has the T-line on their chart. Okay, so stay long on this one. Now, Kodak. People were saying, well, should we have gotten out today? Remember your first lesson. Yeah, I'd probably use the T-line, because if it came back down through the T-line tomorrow, RW, they're selling it off. Worst case scenario is you could always buy it back if it came back up through the T-line again. So here's why your first lessons or your first learning of candlesticks is the signals and This is kind of the definition of what each signal represents. A doji, what's that represent? Indecision between the bulls and the bears. So when they're pulling it back, and they do a doji, the assumption is they're pulling it back, but indecisively. So what's all the visual elements on this one? First of all, it looks like it bounced right off the T line. Now, every time I make this bigger, get it on the other chart. Made it bigger, move away from the T line, but I guess. But what other? So if we're looking at this is why you want to kind of add everything together in your instantaneous visual analysis. What type of pattern do we have setting up here? We've got a big fry pan bottom. We've got a smaller fry pan bottom. We've got a gap up message that confirms. And now we're still in this fry pan bottom with the trajectory still, there you go, Harry, that's what I was going to get to. Now you've got a double doji setup, which means if they've traded indecisively, pulled it back indecisively, bounced off the T line, if they open up positive, what's the analytical result? The indecisive selling is over. They're buying again. You want to start buying immediately. Or if I saw it open and it started trading positive, I'm jumping in because that means this pattern setup works again. And the reason we recognize this pattern is because we know that if it opens positive, the probabilities are extremely strong that it's going to start trading higher. So look for your double doji on a fry pan bottom gap up. I don't understand. Oh, isn't. GB, I don't know what you just asked there. Is it a limit or is it a target? Right up here, that's a target. It's not necessarily a limit. Isn't it also an abandoned baby? No. Where does an abandoned baby occur? By itself at the bottom of a trend or at the top of a trend. This is not an abandoned baby because there's no gap in there. There's no, they filled the gap. Yes, so there's your first target. And if I can make this smaller, it was up here. Now, why can it get up there before or again? Because what is most people's mental blockage? Is, boy, I don't want it to get up, I don't want to be buying it at an all-time high because there's just a mental block against that. So they can be buying all the way up there. They can be buying way up in here because it's been there before. So you're not buying an all-time high, or that's what the general thought process is. So you've got a fry pan bottom. You've got gaps that can be filled. That gives you a lot of upside potential. Plus, it's in the limelight or in the news. Okay, all right. What do they call an inverted? Bruce, yes, there's going to be a lot of those today. And I'll find an inverted hammer somewhere for you. It would be an abandoned baby if they gap it up tomorrow above this level and go positive. An abandoned baby is just basically in one inverted baby called a barf. So, Michelle, this would become a abandoned baby if they gapped it way up again. On Kodak, if you were to move up, if it was to move up tomorrow, you wanted to buy calls, how far out would you buy? Jerry, that's up to each individual. Now, if I was, I've already owned calls on it. I can't remember which ones they are. But I might go out to 2 or 3 weeks just to give me some running room. I wouldn't, and you could even go out 4 weeks. Because what happens coming out of a fry pan bottom usually has a very strong uptrend. So it might take it 2, 3, 4 weeks to get up into this range. So essentially what we're looking for is the pattern that give us the prospects of a big price move. Now, a lot of people will ask, should I be buying here? A lot of people say, should I be buying here? Well, you've got to calculate that you're coming out of a fry pan bottom. And so now people are asking, should I be buying here because they don't want to miss a move that's already started? And the learning process is, no, you probably could be buying here, but where should you have been buying? Probably right in here when it was breaking out. So this is what educated me, was to say, well, this is a good move. What started this good move? Well, I could see a pattern breakout right at this level. And this is why I tell people, is this the best place to be buying? Or are there other charts out there right now, which we will look at, that are much better probabilities that you're not buying already in a price move? Now, here's one. Again, remember, this produced huge profits because of the big cradle pattern, the big fry pan bottom pattern, the best friend gap up through that level. Now it looks like we've got a J-hook pattern setting up. So notice, this is where you want to know your convergence analysis, all the pieces of information that puts you in a situation where the probabilities are extremely strong that you're in the right place at the right time, such as a left-right combo right here at the T-line. Confirms. Now what can we see setting up? A J-hook pattern coming out of this fry pan bottom. It did a doji today. Not bad for the day we had in the market. But what do we got setting up? Well, if this opened positive, what else have we got going on? There's our doji sandwich. If the doji sandwich took us up a little bit more, what would it be telling us? It's still confirming this J-hook pattern. On goose, I always do that. It looks like good is bad. Goose, same scenario. That's kind of an evening star signal, and it bounced off the T-line today. So if you're in goose, what's your analysis at this point? You've got a sell signal, but you're above the T-line. So if we wake up tomorrow and the Dow is showing that it's going to open up down another 145 points, and this one is opening lower, I'd probably close it out. You've got an evening star signal. You've got a wave 1 and a wave 3, about the same magnitude as wave 1 that broke out of this bubble breakout. It's probably time to take profits. What's the worst case scenario? Next couple of days, it does another J-hook. You can always come back into it. But why would you get out? Because you don't know whether they're ready to bring it back down here because of the market in selling this off. Why take that risk? Got profits? Take it, because there's another chart somewhere out there that looks just like this where your probabilities are much better. On based on what the averages are doing. Jim, we'll get to the shorts. Don't worry. Yeah, we've got short positions on. Joe, did you watch this? Where we just, same scenario. If it opens positive, what do you got going on? A bullish doji sandwich confirming your J-hook pattern. Where do you not want to see it trade? You don't want to see it trade back below the T-line. Kodak, if it does the expected big move later this week and you own calls, it would be prudent to take. That's all up to each individual. If I've got, let's show you what I did. If you've got big profits, now what happens to those big profits? If you were buying calls, and I'm just going to use an example. If I'm buying calls, let's say the 12 and a halves, or let's say even the 10s. I think I bought the 10s the other day. I don't even remember. Let's say I paid $2.40 each for them. And now, those I'm going to just say they were the 10s. Now I'm up here, and my 10s are now worth 8 points, 10, $8, $10, $12. What's my downside risk? A big down move could take back 3, 5, 7 points of it. So you might take profits up here. But now you're in the overbought area, and it still looks like it could go further. Now I might switch out and buy a 20, 25 spread that if it continues up in a high-risk situation or a high-risk area, I'm still making a good percentage return on my money based upon, let me just use a figure. I buy the 25s for $1.60 with the potential of going to $5. And then my protection is, if it all of a sudden turns around and goes the other way, I've only got $1.60 exposed instead of my $10 in those calls. Harry, yeah, that's not what I would call an extensive top. That's just, I'd be more concerned about a tweezer top when you've moved way up, and let's say this came up here and backed off. That would be a tweezer top. This is still kind of in an uptrend. That's just kind of a little resistance level. Yeah, tweezer top should be very identifiable. This is just kind of a little trading range. Okay, at this speed, we will be here for breakfast. Here's another one coming out of the J-hook pattern, coming out of the fry pan bottom. Now you've got a bounce off the 34, had a little bullish flutter kicker, gap up breakout. So what can we assume about apps right now? It's in an uptrend as long as it stays above the T-line. Now, I shouldn't say that. Keep asking questions because it's the questions that allow me to see where I need to spend more time directing things. So I just make fun of people. I like to. On a tweezer top or bottom, do both bars need to be close? No, the bars don't. A tweezer top is the tops were the exact same level. And usually they have to, HW, hold on, I'll get there, all these. And usually they're extended. Like if this had come up here and done it, if they were extending up above the trading range and falling back off, those become tweezer top. This is, I wouldn't consider a tweezer top because it's really not extended. It's just part of the trading range. Yeah, I've got Roku in here somewhere, so don't worry. We'll get to it. All right, so here's another double doji setup. We've had the nice left-right combo breakout. You can see the little fry pan bottom. You're pushing right here on the 50. So what would you have as far as trading rules and pattern identification on a positive open tomorrow? Well, first of all, you'd have the doji rule, that it's going to move in the direction of how they open after a doji. If they're going to trade positive after a doji, what's likely going to happen right here? They're going to go through the 50. Now what do you have? Kind of a little bobble breakout. And it's further confirming this fry pan bottom. So this is one that, because of this doji, the double doji setup, at least now you have a format that we didn't get into this one today because we were looking for it to open positive and trade positive. But now we've got a double doji setup. We know what our next trading platform or strategy is. A positive open after a doji says it's going to go positive, and that would give us kind of a bobble breakout, bouncing back up off the 34. That becomes a very viable place to be buying. Got a few of those. SRNE, very viable place to be buying, and INO. If you're concerned about this level, you just watch to see what they do tomorrow. If it goes through this level, what do you got? You got basically that kind of bobble breakout again. Definitely could be buying this one. You can see a tweezer bottom on AMD. Now, remember, a tweezer bottom is where you can see the tweezer. That's just kind of a support level. What is a left-right combo? Both of them at the same level. Dojis, RW. You're supposed to be studying your signals and patterns. A left-right combo. Which one was the left-right combo? It was one of these. This is kind of this is a left-right combo. A doji followed by a bullish engulfing signal. All right. So your first step, RW, is to learn the 12 major signals, and then the patterns. There's about 6 or 8 patterns. And again, the reason you want to learn these, first of all, the signals are what the Japanese rice traders have shown us is what's going on in investor sentiment, and that have worked extremely well for the past 400 years. The patterns are basically the information that we see about candles, or about human nature, time after time. That's why they're patterns, because they're going to have results. And then we've got what we call the top rank signals and patterns. That's your best friend, like a doji gap up, or your left-right combo. There's about 12 of those. Now, when you start learning all of those, now you've got a much better grasp of what moves prices. And that comes back to my often repeated statement that prices do not move based upon fundamentals. Prices move based upon the perception of fundamentals. And the candlestick signals are the graphic depiction of human nature or investor sentiment, telling you what they think about those fundamentals. So here's your kicker signal on home that hit the target that we would have expected, right here on the 50 and bounced up. So if you're short home, get ready to cover this position if it opens positive, because now you're down here in the oversold area. They've hit a support level. They're buying. So the probabilities are starting to go against you. Cover your short position. Okay, let's take a quick look at all the biggies. Labu failed today. There's your hanging man lower open. That's giving you a good indication that you're probably coming back into this trading range which means the biotechs are probably not a great place to be right now. Tesla, simple rule. As long as it stays above the T line, you stay long. If you stopped out with a safety stop at yesterday's low and the T line, you could have closed it out. But then as you saw it come back up, that's the try to find out. Saw it come back up, you could be buying back based upon the fact that if it comes back up through the T line, which way is it going? It's going back up above the T line. Oh, did they come out with earnings? Won't be so great. All right. Well, I do like the technology they're pushing, which is batteries that have huge battery day tomorrow. Have they canceled it? So there's Amazon, another one that you're still in the oversold area. You've moved away from the T line. You did almost a little meeting line, but this is not a reversal signal unless they open positive and start trading positive. It doesn't tell you that you want to go long, or you might on a short trade or a short-term trade, but it's pretty much telling you that the downtrend's over. There should be a bounce, but then you have to watch to see what happens once it gets to the T line to see if they're going to get through that level. Oh, that. Now there's a bullish, almost looks like it's not a bullish engulfing, a piercing signal. Now remember, a piercing signal has two elements to it. One, it has to open below any of the previous day's trading, and two, it has to close more than halfway up that candle. So there's your piercing signal on Apple. If I was short, I probably would have covered some when it gapped down and then started coming back up through, maybe cover half the position, because where are you? You're in the oversold area and you're starting to see a potential buy signal, and you're a little bit away from the T line in the oversold area. And then tomorrow, if it opens positive, we've got a piercing signal confirming from the oversold area. Now you get ready to start thinking about buying, because where's all this buying occurring? Right smack dab on the 50-day moving average. Okay, new battery. All right. Oh, okay. All right. This is another advantage of having a chat room where everybody's kind of watching the same charts and then the same stocks. That people are keeping track of the news a lot better than trying to keep track of all the news on your own. Another piercing signal in NVIDIA. And look where it closed, right smack dab on the T line. Does a piercing signal need confirmation to be a buy signal? Yes. It needs to open positive and trade positive. You don't want to see it open here and then doesn't do anything. Or if it opens here, where do you buy? You buy if it comes back up through this level. That tells you the bulls are still in control. Okay. Apple does have a gap around 100. Oops. Wonder if I can see. It's not Apple. Yeah, it does. So it could go there, but you're seeing a piercing signal, or one of the 12 major signals in the oversold area. right here at the 50, I'd get ready to cover short positions and maybe think about buying. Now, that's also going to be based upon so they backed off. They were up off, what was it, about 100 a while ago. Now they're up 36. Kicker signal needs less confirmation. A kicker signal is the immediate information telling you there's been a drastic change of investor sentiment, because that immediate information is built into the signal. It closed here and they gapped it up above the previous day's open and started going in this direction. That tells you there's been a drastic change of investor sentiment. So if I see a kicker signal, I'll start going after it. Unfortunately, I didn't see Roku until it was way up here. But that is a kicker signal, which is pretty much telling you there's probably going to be more upside. Cub also, yes. There, you guys are 2 symbols ahead of me, 3 symbols ahead of me. There's another kicker signal, big breakout. So what do we expect off of that? A 45 degree. Yes, and the fact that they gapped it up above the resistance level and went higher showed you there's a brand new investor sentiment. And I think Microsoft, somebody said, went positive today. It did. But that is not a piercing signal. Because notice where it didn't open. It didn't open below here. So this would be just considered an up day and a downtrend. Yeah, so it wouldn't be something I would go after because it doesn't have the symbol. Let's see. Let me get caught up. Netflix. Now that's a left-right combo. That's a doji followed by a bullish engulfing in the oversold area and closed above the T-line. So if you're buying this one on positive trading, which would also be influenced by the market itself, then watch to see what happens right here at the 50 resistance level. If it gets through there, now you've got a pretty good idea they're going to come back up either to here or up here. Again, that's still going to be a function of strength in the market in general. OSUR, there's your fry pan bottom, and it was up 6 cents today. But again, the confirmation would have been a positive open today. That when they opened it lower here and brought it back up, this is the advantage of the colors of your candles. You can see there was still buying ever since they opened it. Still makes it a strong buy. At least you suspect coming up here to fill the gap here at the 50-day moving average, and then you see what happens from there. Now, another advantage of the chat room is people point out charts that are very that you might not have caught on your own scanning. So look what happened here. There was your kind of your big morning star signal, breakout off a series of dojis, a cradle pattern off the 50, followed by a doji sandwich. Something big's going on there, obviously. It should be going, or probably be going much higher. And VXRT, there's your fry pan bottom that gapped up. Look where you are. You're right here at the 50. So if you're long, you stay long. Now what can you be doing? Well, if it comes up through the 50, your fry pan bottom is breaking out, and it's breaking out through the 50. That tells you there's probably more upside, that they don't care about that resistance level anymore. Ballard Power, same scenario. Let's take this and follow right somewhere right in there. Again, they opened it lower and brought it right back up on a bad hair day. What's that tell us? They were still buying this no matter what the overall market conditions were telling us. Toll Brothers. Mercy sakes, I just can't type. Another fry pan bottom type pattern. Bouncing off the 34. Another one you could be buying with the anticipation they're at least coming back up into the trend channel. TN, hold on to your individual ones until I tell Jim to do the double line. And because we're going to be so late tonight, everybody just do one. Row generation, fry pan bottom with a breakout level right about there. So I'd have a buy stop at, or if it opened positive, I'd want to see it go through, or put a buy stop at 1760. If it comes up through there, it's telling you your pattern is breaking out. No problem. We'll get to all of them. That one broke out. Kind of on a scoop pattern. You could be buying this one. CSTL. Had this one on here for a reason. I guess kind of a J-hook pattern. Smaller. Another scenario where you'd be buying this on a breakout or on positive trading because it would confirm your J-hook pattern. So where would you have been buying this one? Well, it opened down here, so you don't pay attention to it until it comes back up through that level, because what color candle is that setting up? You can see that it's a green candle. J-hook pattern. Still wouldn't be afraid to buy this one on positive trading tomorrow. And LVGO. This is another trading strategy that is very effective. You can see what happened when they finally hit a big sell signal. Kind of took the wind out of the sails of this one until it drifted back to where everybody was watching to see if it was going to act as support, the 50-day moving average. And then there was your left-right combo. I'd still be a buyer of this one, especially if it opens positive and comes up through today's high and or yesterday's close, Friday's close. Because you got a left-right combo right off the 50. Where do you think everybody that's following the stock is watching to see what happens here? They're watching to see if it's going to support at the 50. Oh, man, who wrote this? And same scenario. You can see how they opened this lower but came right back up after a bullish engulfing gap up. You could be buying this one on positive trading because it was telling you they weren't going to close it back below the T-line. FLGT. There's your fry pan bottom. There's a gap up here. There's your next likely target. So still a lot of good bullish charts. We'll get to the bearish charts here in a second. Zoo, another one you can be buying with the anticipation they're coming up here, and then there's gap area up here to start playing around with. So when I look at something like this, there's going to be a lot of good-looking charts. FLGT's up 8% after hours. All right. Now you figure out, well, if it just moves up here, that's a 15% move. And then if it gets up into this area, now you're looking at a 40, 60% upside. If you see something that stops you out because it's trading below the T line, Jace. That's what you got that. That's what the stop is for. To get you out of a bad trade. Try to think of which one do we just look at? I forgot which one we just looked at that did. Is it Penn? Nope, I take that one. Oh, so let's say you own this one and then you stopped out with it trading back down below the T line. That's what you should do. But now it comes back up. What's it telling you about your chart? Well, if it had closed down here, obviously that would tell you there's a different scenario about investor sentiment. The fact that it comes back up here tells you, oops, the buyers are still there. So if I get stopped out, it's because it was moving in a direction it shouldn't have been moving. But I can always buy back in if it opens positive because it tells me, all right, the original assessment was correct. That was just profit taking. Now, I would guess that probably maybe 20% of the time I might get stopped out and I come back in a second time. And sometimes even a third time. Still trading below the T line today. Did it? Just barely. Joseph, with this being moving up like this, yeah, I would have still waited to the end of the day. But it closed above the T line. Jace, that's where you want to get your emotions out of your head. That's a good place to have them. That if you go based upon the rules, that if you get stopped out, that's what the stop is for. Yes, so there's a reason to put the stop there on ARCT. Or your stop would have been at the low of the doji. But where you were stopped out and it closed here, you're happy you got stopped out. If it came down here and then came back up, you got stopped out. Now you think about buying it back. If I always illustrate that if this is a 10-point move and I only got 7 of it because every time it pulled back I got stopped out, but I got back in when it was time to get back in, I'll take the 7. I don't want to hold on to something that now is heading in this direction. Yes, Marshall, that's another point that every night I do scans, I've got a watch list right now that I clean off every 3, 4, 5 trading days. It has probably 7, 10, 12, 15 good charts on it. So if I get stopped out of something, I don't say, oh man, now what do I do? I've got a place to put my money someplace else right away. Okay, Lope. Form kicker at oversold. Should I? Didn't form a kicker. It formed a bullish engulfing. So if I had been short, knowing that this was a potential reversal and it opened here, I would have had my stop at this level. So now you've got a bullish engulfing in the oversold area. The probabilities have now gone against you. Now, could it go lower? Yes, but the probabilities are you're in the oversold area and you're seeing buy signal. I would close this out on positive trading tomorrow. No. The worst trades are tax purpose trades. It has nothing to do with the trade itself. So, yeah, you don't worry about worst trades until the end of the year, and all that is going to do is just be added into your net gain or loss for the year. Happened to me on BE, how to avoid that. You don't worry about it. Because it's all accumulative at the end of the year. Now, the reason for a wash sale is what the IRS doesn't want you to do on December 31st is sell your stock at a loss. So it goes into this year's tax, and then the next day you buy it back, hoping it's still going up. That's a wash sale. That your loss disappears. When you are stopped out of trade and buy back, happened to me in BI. No, yes, okay. So please summarize. When do you use the low of a doji versus a close below the T line for a stop? If you can see that you have a doji and not quite in the overbought area, but in this case, if they remember the doji rule, they're going to move in the direction of how they open it after a doji. So if they've got enough selling strength to come back down through the open of the doji, you can close it out. If that is very close to your T line would have probably been closer to this level because it curled down as it was straightened off today. But if you could pick either spot. If the doji low is back close to the T line, use the T line. Okay. And also, you're going to be a little bit more, activated if you wake up and the pre-market futures are way down. Might say, if they come down through that below the doji, that I want to get out. Okay. Where were we? Did we do Zoo? Zoo you can be buying. Terrible handwriting. YTEN. J-hook pattern on YTEN and LTSN. Kind of a left-right combo. This one can be bought, especially if it comes up through the 50. Little teeny gap up here. These are just kind of charts that look good. There's a left-right combo. Look at your doji, little teeny hammer. This indecision right here at the 50. This told you what was happening. So you had a bullish engulfing right smack dab off the 50 up through the T line. Where do you think your next target should be? Probably back up into the trend trajectory. All right, Gail. And Vivo, still a nice fry pan bottom with observe the obvious. A morning star signal right off the off the 200-day moving average, where do you think the next target is? More than likely coming back up here to the top of the fry pan bottom, which kind of equates for coming up to the 50-day moving average. But looking for an entry point, some mornings you have just some decreased price level, say on the 5-minute on VPR this morning. Does this dissuade you on some of the thinly traded stuff? When looking for an entry point, some mornings you have just some decreased price level, say on the 5-minute chart. Does this dissuade you? No, not really. What I'm looking for is, did we recommend VVRP today? No. We're looking for a level that tells us the bulls are in control. It's confirming. Don't want to do it 1 or 2 points above, or 3, 5, 7 cents above the previous close, because sometimes they open it right there and trade it off. I want to see that it's moving in that right direction. So when I put a stop or put a place to buy, if I was buying this one tomorrow and it closed at 16.35, the high today was 16.37, I might say, all right, buy this at 16.42 or 16.45. Because that would tell me they're buying, they just didn't gap or open it there and start trading it off. On the thinly, not really. And again, I've tried to keep the thinly traded stocks out of my trading universe by looking at stocks that trade more than 200,000 shares on average each day. What scan criteria produces a fry pan bottom like Vivo? More that it probably showed up on one of my charts as being a big percent move. Now I can go back and see that it's not that I stand for it. I found this strong trading over here. Now I can look back and say, oh, they're coming out of a fry pan bottom. I don't necessarily sell or buy off the 10-minute chart, but I use the 10-minute chart. Now, I'm usually trading things like soybeans off the 10-minute chart. So if I'm day trading those, I just go to the 10-minute chart and see what pattern setups. So if I was short, bullish Harami in the oversold area, I'm closing out my short position. And I might be buying long, but then I just close it back out here. Okay, so on the other side of the coin, there's your evening star signal. There's kind of your shooting star gap down. This becomes a good short. Because now, opposite the fry pan bottom is your dumpling top, the slow rounding top. John, there's nothing major you can do other than analyze what's happening. If I see that on a day like today, I closed out a few things very quickly. I took profits immediately on this one because you could see it gap down and was trading lower. Where would we suspect it was going to the T line? Now, we don't know whether it's going to support on the T line. We didn't know whether the market was going to stay down 1,000 points. But if this became a higher risk trade situation, and we don't know what the market was going to do based upon that hard selling, I'd rather close out and be in cash. Now I can come back and make an assessment of what to do later. Either buy back or ask myself, is this the best place to be buying something? Or do I go look for a chart that looks like this? So if you've got something that immediately tells you it's time to get out, close it out. The worst case scenario is you can always see what happens later in the day, see if you want to buy back. I closed this one out because as it was moving down and it started trading below here, I closed out, took my profits. Then as it came back up, I could see that it wasn't selling off. And again, this was with calls. I took my profits in the calls. And then as it started coming back up, I went ahead and bought some spreads. Yeah, so on something like this, where you might have good profits, did I do that right? Close it out. Now you can make another decision of, you can find another chart that looks like this. So what I've discovered, and again, this is that emotional connection, is most people hate to close something out, and then it turns around and keeps going up. Like, oh man. Except that's only if your supply and demand of opportunities is so bad that you have to get back into something that's going up, or you've got better charts out there that look like this where the risk and your upside potential is much better. Well, there's other times, when something gaps down, if something opens up and starts trading lower, probably close it out. If something gaps down, just because of the market, I'll probably give it a little bit more time and see what it does. Because it's already down there, unless it's gapping down and then continuing down. You have to make that decision on, is this trading off? And you will be able to see that pretty easily on something like this where it might have traded down for a little bit. But you've got to kind of think, well, if the market's down 800 points, and this is trading down a little bit after it opened, how much more is the market going to go down, and how much further down is this going to go? So a lot of times when you see a market sell off that hard, I'll wait for a while to see whether it's the market's coming back up or the ones that are selling off are coming up with any great resiliency. I have another one, CHR7. I closed this one out. I had calls on this one because we were looking for trajectory number 1 and then trajectory number 2. But right now, trajectory number 2 has disappeared. So this might be a slow, steady uptrend, or it might open lower tomorrow. So I closed it out because I could probably find something with better probabilities to it than trying to guess whether this is going to go up or go down. I'd rather have that money where I can take it back to something else that has a lot better probabilities. So something like this is a good short. If you'd been long and you saw a doji in the overbought condition that far away from the T-line, the logical stop was right here. Because logic says if it opens and it starts trading back below the low of the doji, that far away from the T-line, what type of signal are you going to probably get? A bearish engulfing signal after a doji? Where's your next target? Probably back down here. So the advantage we have, again, with the information built into candlestick signals is it's telling us when there's a change of investor sentiment. This level confirms there was a change of investor sentiment. That's why placing stops with in candlestick analysis is so much more common sense. Now there's a bearish kicker signal. That tells me if they open this lower tomorrow, breaking this level, it's got a lot more downside. I don't know what you could call it. It doesn't matter what you call it. It's kind of a left-right combo, yes, but it's more just evaluating that you've got a doji way up here in the overbought area that far away from the T-line. Isn't that a belt loop? Isn't what a belt loop? What is a belt loop? It's a belt hold, remember? Who wrote this one? EPST. That's apparently not the right spelling. EPST. I'll do that. Let's see. And then there was ARCT, but that's an evening star signal. Where do you think the next possible target could be? This is wave 1. Wave 3 could take you back down to the T-line. Okay, hold. On which one, Jace? I can't tell which one you're referring to because we go through so many. Also, nice given coming out of, well, it's not quite in the overbought area, but it's a kicker signal. So, I may have said it before, if I was going to trade just one chart, it would be the best friend signal. If I was going to just trade two signals, it would probably be the best friend signal and the kicker signals. So there's your evening star signal on MGNX. Again, with a doji gap down, if this opens lower, that's a strong evening star signal. That could be a very strong downside short position. Jace, I don't know which one you called a belt loop. We're kind of talking in circles here. Like, I don't know which one there was 3 back. That one? MGNX. That was a fry pan bottom potential. Let's make this a little bit smaller. No, it was bigger. That one? Okay. That's not a belt hold. What does a belt hold do? Just a big bearish engulfing signal. A belt hold. I don't know. Anybody remember a belt hold? I'll try to find a belt hold. A belt hold is when you gap way out of a trading range and you come back into the trading range. You're not helping anything, Jim. So there's another good short. Fry pan bottom. What should a fry pan bottom be doing? Breaking out. When it failed, What's this telling us? It might be heading back down toward the 200-day moving average. Another bearish J-hook pattern. And notice what it did to get up to the T-line. Indecision, indecision, another indecision, indecision, gap down. So what do you got going on? Wave 1, wave 2, wave 3, bearish J-hook. ARDX, that was a belt hold. It didn't confirm, but that's a belt hold. Notice it gapped way out of the trading range and came back up into the trading range. That was a belt hold right here. It continued your uptrend. Thank you, guys. Holy smokes, it's already 9:20. There's another failure of a fry pan bottom breakout. Should be more downside. That was Alex. Some of the mining stocks. There's a big bearish evening star signal. And remember what happens, what creates the force? There's your doji gap down on that side. That means you could probably be looking for this one to come back to the, with that force of the evening star back to the support levels. There's your bearish kicker signal. Telling you there's a lot of force to the downside. And SDC. This is where you kind of assume, not assume, this is where you start using some of your subjective analysis. You're in the overbought area, doji. That's a tweezer top right there. Then another doji, then another doji. When would you have been out of this one? When you saw the market opening lower today and they were gapping down, you would have closed it immediately. Okay, so we've got to see what the markets are going to do tomorrow. Now, remember it was up 100 a little bit ago, now it's down 38. So, if we wake up tomorrow and it's opening lower, you probably want to take a look at some of those shorts. Okay, so somebody was asking, yeah, here's the sign up for the weekend or the Saturday training. This is where you take the information that you can see as far as the mechanical aspects of candlestick signals, but you have to now kind of assimilate it into your analysis to get your emotions out of your training or out of your trading. And that's probably the major benefit that I got out of candlestick analysis was if I could see what was supposed to be going on based upon the probabilities of candlestick signals and patterns, and I knew using the confirming indicators what the results should be, now I get rid of, oh man, I hope this one's going up further, or I think this might be time to get out, but I was so hoping it was going to go further. It gets rid of your emotional decision making. It allows you to say, whoops, this doesn't look good. Let me take the money off of this trade that has probabilities going against me, and let me go find something with much better probabilities. Okay. Are there any general questions about candlesticks? If not, Jim, go ahead and do the double line. Jim? There you go. Okay. This one can be bought, Domino's Pizza, but remember you're kind of in a trading range, so expect your next target to be up here somewhere. Shopify, if you were short, I would cover the short. I wouldn't be going long until they give you a little bit more bullish confirmation. And EQT, that's a good-looking chart. Look at all your hammer-type signals telling you every time they took it down, they brought it back up. You could be buying this one. That's not a bad chart. And Daku, yeah, a little left-right combo. I wouldn't buy it, though, until it probably, if you were that close to the 50, I'd wait for it to get up through the 50. OPK, nothing wildly exciting, even though it's a little bit bullish. Can we say it's a left-right combo? You'd be squeaking it out to say that. Yes, you want to ask what you're looking for on each one of these charts. AEO, yes. This one, if it opens lower, you can short it because now you have a bearish left-right combo. If it opens lower, you've got a bearish doji sandwich following. CLDR, did I do that right? If you were short, get ready to cover that one on positive trading. You're seeing buying right off the 50. And Hewlett-Packard, you could short this one, but I would wait for it to break the lows. So you're breaking out of that level. Walmart, if you're short, you stay short until it trades back up above the, or closes above the T line. A breakout on Genco. Oh, ZVTR, that's also in the solar business. All right. Scoop breakout on Genco, yes. VIPs, you can get ready to buy this left-right combo. I suspect it's coming back up at least to test this level. If it gets through the 50, then there's got the big gap area to fill. Band, we had a strong chart today. There's your bullish engulfing off the 50, followed by a doji sandwich. Expect more upside. AMD, you get ready to cover shorts. If you're short, you can get ready to buy on positive trading tomorrow. And Dio, nothing. Yeah, I wouldn't be long or short Dio. There's just no direction to it. Caterpillar, this one, yeah, you could short this one, or if you're long, I would have closed it out today with the gap down below the T line after again, there's your tweezer top. What we did, Zoo. Zoo, you can get ready to buy on positive trading. We did, oh, there you go. Abbott, nothing. I wouldn't be long or short. There's no direction. I'd move my money someplace else. Boeing was still a little bit squeamish. Another one that I would probably be going short just because it's a junky chart. But I would be going short if it came back down through today's low. And NVAX. Boy, another one where I wouldn't be long or short. There's just not enough direction here, and yeah, I probably wouldn't be long or short. If you happen to be long, it needed to close above the T line, and which means it has to open positive tomorrow. If it opens lower, I'd close it out right away. Square. That one you can get ready to buy, bullish engulfing right off the 50. Second time it's come up. There's your inverted hammer. Forget who was asking her. Marathon, nothing there. A little bearish kicker signal. Wouldn't be long or short. I'd be out of this one. Vonage, you can get ready to buy this one. It's not real exciting, but you could buy this one after the series of dojis if it starts confirming to the upside. Cisco, stay short. I am short in the 10-minute. The stochastics rising with buyers coming in, and you don't do anything unless you've moved well into the oversold area and you start seeing buying, Jace. App, nothing, no direction. AERs, you can short this one, especially if it opens lower tomorrow. NK, double doji setup. You can get ready to buy this one on positive trading. If you're long, put your stop just below today's low. It shouldn't come back through that direction. This one you can short. Notice how they opened here and closed positive and gapped it down. You can short this one with the expectation that it could be coming all the way back to the 50. Okay, already. All right, everybody. So it'll be important to see how they open this market. See how they open the market tomorrow. But even if they take this up tomorrow, you probably want to cover short positions, but I definitely wouldn't be going long yet. All right, and somebody was private messaging. Yeah, when we do the private, or we do the eliminating emotion, it's because we're going to be looking at things with a much more subjective scrutiny, that if we start seeing things that don't look good, with the market not looking good, even though you haven't had a true sell signal, and it's not doing what you were expecting it to, close it out. This is where you can hang on to things as long as they stay above the T line, but now you have to assess, is this the best place to have my money, or should I be looking at something better? All right, everybody, thank you for showing up. Kept you way past bedtime. We'll see everybody bright and early tomorrow morning. See you then.